Hey guys, I'm here with my buddy RJ on the RJ and Sewell Let's Talk podcast. I think this is show 4, right, RJ?
I think it's number 4.
Yeah, we're learning, y'all, so we appreciate the support. This guy's jumping in. We should have a special guest. Hoping to get him on shortly. We got a lot to talk about. I mean, man, I can give you a lot. But doing this podcast a day early today because I'm leaving out of town tomorrow. So I appreciate RJ taking some time in his schedule to accommodate.
Absolutely. It's always fun.
Yeah.
It's a couple of days early, but, it's a great way to start the week off. Normally it breaks the week in half for us, but this is kicking the week off, making it a little bit different, but still good.
Yep, absolutely. So how was your week last week? How did things finish out for you?
Things were good, man. I think I shared with you that I had an opportunity to help some people with life insurance. And I have another one tomorrow. I have some follow-ups coming. So, things are going fantastic there. Also helping people with their homeowners insurance and their auto as well. And one that I rarely talk about on here, which is the umbrella policy. We'll get into that another time perhaps. But if you don't have an umbrella policy, please consider it, considering the very litigious society that we live in now.
Okay. You want to talk about it really quick? Give us the high level, what it is, and
sure. So an umbrella policy, for those who've never talked about it, unaware of it, it's excess liability. One of the if you break commercials into topical segments, one of the most frequent segments that you see right now is attorneys. Why is that? Is because people are suing other people. That's
ready to get rich, right? One of them.
Absolutely, that's right. That's everybody's easy lottery ticket. It's an easy way to put some money in your pocket. I shouldn't say easy, but it's a quick way, or a quick way to put a lump sum of money in your pocket. That's what the umbrella policy protects you from, being sued personally. So if you want to talk about it, give me a holler. rjames1@amfam.com is a quick way to reach me, or you can call my office at 773-792-9009 as well.
Yeah, I don't even think I knew that number. I know your cell by heart, but I didn't know that one. That's a new one.
Yeah.
All right. We'll talk a little bit about that. I mean, we're gonna do a short show unless we get more on here. I think it's some things we can go through, have some fun with. But I think that I want to give a couple of strategies I think that we could use to help people get in homes. I had the pleasure. We did and we got to have Eric on here, man. I forgot to tell you about this. So Eric Eklund is an appraiser that did my lunch and learn this past Friday, and he killed it, man. We had standing room pretty much only, and he's going to talk directly about consumers and how you can prepare your house to put it up to get the most money. Eric, I think you met him once because I'm pretty sure he did one of your appraisals.
I know the name.
Yeah.
I probably know him. Yeah,
I think he did one, but no, he's pretty good at showing you how to put some strategies together as far as like investments and properties, things of that nature. So we'll try to get him booked in the next couple of weeks, RJ. Then we'll put you on and get Mo on here. Just hoping he can jump on for a second. But no, so we can dive into that a little bit because I think that's important. The umbrella policy. Let's talk a little bit about that, if you don't mind sharing a little bit more. And then I want to talk about some of the new products we have. A new one that we just got last week that I think is a good strategy to help those that are on the fence that want to take an opportunity to buy a home.
Excellent.
So I'm gonna let you kick it off. So dive into a little bit more. I mean, what you can share, because I think as much as I can get on here and talk about mortgages and real estate, I think it's important that people should protect their investment. It's probably one of the largest investment that most people have, and a lot of time it's underprotected.
Absolutely. Yeah. So, the umbrella policy, like I said, it's excess liability. What it does, if you consider an umbrella, imagine yourself holding an umbrella over your home. And that's even if you're a renter. Okay. It keeps you from being personally sued. So holding an umbrella over your habitational, your dwelling, over your cars, if you have motorcycles, if you have boats, if you have snowmobiles, things of that nature, If you have a few rental properties, if you have a second home, the umbrella cover is an excess layer of liability protection over all of those items. It also, and this is a part that a lot of people don't know, it also broadens your general liability coverage. So, when you have your auto policy, for example, if I go, and I don't know if this applies to every company, but it applies to American Family. If you go out of the country and rent a vehicle, for example, Cheryl and I were in Bermuda one year. We rented a moped, and we went tooling around the countryside there. And if you know about Bermuda, it is British rules, right? So their road is switched to the opposite, if you can imagine that. So if you're making a left turn, you're turning into the closest lane, not the farthest lane. And imagine, I've been driving in the United States for my whole life. Imagine all the thoughts that I had to go through in order to make myself turn into the right lane, into the correct lane. What if I missed? What if I turned into the wrong lane and I caused an accident? So my umbrella policy would actually cover the liability that's associated with that accident while I'm outside of the country. Okay. Typically, your auto policy covers you for the United States and its territories. So that's a much narrower scope of coverage. It also enhances some additional coverages. So it covers you for libel and slander, which is not covered under the homeowner's policy. So it's a really great policy to discuss with your agent. Like I said, if you have any questions about it, please feel free to give me a call. We actually have, at American Family, we have an additional coverage, an endorsement that we can add that enhances the protection for your uninsured, underinsured motorist coverage too. That's a coverage that comes alongside the liability on your auto policy, and it covers the people in your vehicle or your household if somebody who is underinsured or uninsured hits you and causes bodily injury. And the minimum amount on the umbrella policy is $1 million. So at our company, we stack the coverage. So your underlying liability, say 250, 500, 250 on the auto policy, 300,000 on the homeowners and so forth, it stacks an additional $1 million on top of that, which is fantastic. So it really keeps the attorneys out of your personal pockets and it transfers that risk over to the insurance company. It's well worth it. Basically, what you're doing is putting a team of attorneys on retainer every year that you have it.
So I got a question for you, RJ. So, we get that who actually needs an umbrella policy, which you kind of answered. Is this just for wealthy people?
And the answer is absolutely not. So, and that's a great question, B. Wealthy people have umbrellas that are with much higher limits typically because they have a lot more to lose, or they can be sued for more. Everybody needs an umbrella policy, almost like people need life insurance. You need an umbrella policy because, so let's say, for example, you have my daughter. My daughter just graduated from college a few years ago. She's really just getting her professional career started. She has her car and she lives with us. Now, she's covered under our umbrella policy because she's a resident of this house. But let's say, her and her fiance, they get married, they go into their home, and they have typical careers, right? Not the one that he's really looking forward to. But let's say they have typical careers, so they're making decent money, not a lot of money. And let's say they plan to retire early, and they're making the right moves. They're investing early and so on and so forth. So let's say they plan to retire at age 50, but all of a sudden one of them has an accident. They cause great bodily injury to somebody, and they don't have an umbrella policy. Now, the attorney for the people that they injured could come after them for the bodily injury. And let's say that, it takes several surgeries. There's medical costs associated with those. Those costs can balloon very fast. So let's say it comes out in the neighborhood of $1 million. Okay. Well, the auto policy is going to pay out the maximum limits. Let's say, $250,000. and then it's up to Cameron and or her new husband to take care of the rest. Well, that money is going to come from a lawsuit. That lawsuit is going to attach, or they're going to garnish wages until they get the balance of that settlement. Okay, so now where they were planning to retire at age 50, now they're probably going to wind up retiring at age 70, 75. So there's a huge ripple effect there. So thanks for asking that question. That was an excellent one.
No, good. Appreciate you for sharing. It's good stuff, guys. Here on RJ and Sewell, Let's Talk podcast. I got my buddy RJ talking a little bit insurance, spitting some gems about umbrella policies, things. And look, as much as I've been doing this for 24 years, I forget. I don't know all this stuff. It's hard to cross over and know all this stuff. So we appreciate you for sharing. I'm going to dive in a little bit into like one of the products we have now. I'm just going to educate you about it. I know the negative thought process that people have on ARMs, but I'm telling you right now, this is a product that came out, and I'm like, wow, it's pretty interesting that we could help some people out, right? So it's an FHA product. It's a 5 year, it's fixed for 5 years. The average mortgage is about 3 years unless you get your loan in 2020, 2021. You're not refinancing, right? Because you got to do something. But the average mortgage is about 3 or 4 years. If you think about it, most economists expect rates to drop. We've been saying that. But if you can get into a home and get your rate under 5%, which I just did an FHA 5-1 ARM at 4.99, that does move the needle a little bit. It'll make your payment, depending on the loan size you have, quite affordable and then significant savings. And there's other products we could use to help that we consider less risky, but we can talk about though the difference when you're talking about an ARM. The risk factor is after 5 years, what happens, right? I would tell you to refinance it before then. You play it right, but it's just another way of getting in, and you can kind of prepare yourself so you can be comfortable with the payments. I've not always been a big fan of adjustable mortgages, especially back in 2008 when you had those 2-year ARMs and interest only and all that nonsense. And some of that stuff is out still back, as interest only is back. And again, let me just stop for a second for those that beat up on interest only a little bit. If you're paying rent, that's interest only, and you're not getting the write-offs.
There you go.
It's out of fact, it's 100% interest. 100% of it's going in the landlord's pocket,
but with no write-off, with
no write-offs, no appreciation. So no, I mean, it's just another opportunity, I think, that to get you in a home, and it could save you $200-300 a month, maybe more, depending on the loan size. So yeah, I said it, under 5%. There's a way we can get you under 5% without doing all the crazy financing and getting all these credits from the sellers to buy down your rate. We can get you in there. So you want to know more about that, simply just shoot me an email at teamsewell@guildmortgage.net. That's teamsewell@guildmortgage.net. I'll just put it in there so that way while we're out of town, we can get that in there. And then RJ, I'm going to put your contact in there as well. Give me 1 second.
So you brought up something interesting there, the ARM rate or the ARM mortgages. And when I think about ARMs, interest only, things of that nature, and I parallel them to life insurance, because there are different types of life insurance, and there's a legitimate need or use for every life insurance policy that we sell. I would imagine that for every loan program that's available, there's a legitimate use for it.
100%.
Talk about that a little bit.
Yeah, I mean, it's not for everyone. I mean, everyone's not going to do a 5-1 ARM, right? Mm-hmm. But if it can put you in, if it can help you save money, right, and you're nervous and you believe rates are going to come down, why not get in there? There's products like I just talked to a client that's looking to buy a pretty expensive house out in Downers. We were talking about this a few minutes ago, and he's looking at $1 million property, and we were like, all right, so why not look at a buy down? And matter of fact, I'll show you that. Let me put a dummy name on there first. Hold on. Because, I'm very private. I don't like sharing people's stuff, but it's something that I like a lot. And I'll just show you how it works from a buy down perspective, and why, if I was buying a house right now, why I would do this. So I'm going to change the loan amount real quick just to kind of make sure nobody thinks that we're doing. So here, let's share my screen really quick here. Mm-hmm. RJ, I love when you give out good information. You make me. All right, let's see. I don't like that. Here we go. Let me know when you can see that, RJ. Okay,
There
cool.
it is, right there.
All right, so look, this is how this works, guys. So if I have a loan amount that's 750, and let's say the rate is 6.125, going rate to like 6%, 5.96, but let's say it's 6.125.
Mhm.
That regular principal interest payment would be $4,557. Okay. Sorry, I messed that up. Would be, $4,557.
Okay.
If we did a 1-year buy down on us, it'll save the client about $473 a month.
That's
So
pretty.
your rate would be 5.125 for 1 year.
Mhm.
Here's what I would do if I was buying a home. So we talk about products. I mean, we can play around and do different things. Let's say I've got a motivated seller. So Guild, our Sewell team here, will give you the $5,600 to buy down that rate.
Mhm.
If we did a 2-1 buy down where you got to get the sellers to participate, right? And they give a credit for like 11 grand, you get a motivated seller. Now you can give a client, you can get 4.125, which saves you about $922 a month right here. Okay, for 12 months. Then the second year on us, 473, and then the third year, 6.1. So here's what I hear from other loan officers. So why would I do that? Rates coming down. Well, heck, if the rates come down, let's say the rates come down after a year, and you got $5,600 in your escrow. That goes as a principal reduction. You don't lose the money. Why do I like that? Comparing it to a permanent buy down. A permanent buy down, $5,600 might get me down about an 1/8 or 1/4% on a loan like this. Not going to make a big dent. But on a 1 year, if you plan it out properly, we think rates are going to come down. Why not do something like this to make it more affordable, and it gives me better cash flow?
Yeah.
Right. And then you say, oh, I got to refinance. If you go into a crooked lender, yeah, you're going to pay a lot of fees, but you shouldn't. The fees should be under $2,000. I mean, it's not that expensive to do. And sometimes we can save you more than that, depending on your credit score, things of that nature. But it'll be a significant savings to do that. If you really want to get creative and you got a motivated selling builder, like we're paying for the 56, look, they willing to give you like 2%, 3%, 16 on one, 11 on the other. This is at 750, by the way. $1,300 a month for 12 months, $922 the next year, $473. I mean, you can get down to 3.125 playing around with this. And just really quick, and I know I'm talking a little fast. That's why y'all need to call.
Well, that's why, absolutely. That's why they need to call you.
Right.
So, you know what? So as I'm thinking about these opportunities, Brian, so let's say you have somebody who can actually afford the full boat every month. What could they do with that extra money that would help them?
Hold on. Sorry. Give me 1 second. Let me stop sharing.
Okay.
Yeah, I mean, you could send extra to principal, right? With the extra money. I mean, well, it depends on when you say what they could buy down, they could pay down the house faster if they want to do that, right? Because it's not like the mortgage payment is not getting paid. We, as a lender, we're just putting that money in there to pay that portion for you. So you have an opportunity to really double up on the payments and lower your principal amount.
Yeah.
Or invest it. I mean, it's also a financial advisor, right?
Absolutely.
Yeah. So no, that's a good question, RJ. And it to me, it's just another creative way to make payments affordable.
Yeah. Right? So I know years ago you walked us through what the impact that it would have just making one additional payment a year, I think it was. And it was significant. And it blew my mind because I never thought that that relatively small amount would make such an impact.
Yeah. So we used to call it 2 and 18, right? So I haven't pushed that as much on people as I should. Maybe we should get back to doing that as we look at stuff. We just paid off a couple of things. I'm like, we freed up all this cash. Now we pay this house off faster. No, one extra payment to principal knocks about 6 years off the mortgage. 2 extra payments to principal knock out another 6. So on average, 6.5, depends on what your rate and stuff you have and the exact program you're on. So if you figure 2 extra payments, you're done in 18 years. Now there's other ways to get aggressive, but I'm going to do it for the people that are just normal, tight budget financing. Let's say your mortgage payment is $1,200 a month. God, I wish that was the case, right? Remember those days?
Yeah, I do.
$100 a month would be divided by 12. I mean, $100 a month is equal to $1,200 a year. That'll give you 1 extra payment to principal. Then around tax time, because normal people in this price range, they're going to get money back. You write down a check and do another check of principal reduction. You're done in 18 years. If your payment is $1,200 a month, probably you could do a 15-year mortgage because the difference is not that big. But it's just another way of doing it, RJ. You're right. If we did 2 extra payments to principal, you're done in about 18 years. You're saving a ton of interest, right? Paying the bank. So I think that's not a bad idea. But here's my belief though on that. And I'm not saying there's one right way to do it, but if you're going to send a lot extra, make sure that you're investing, that you're saving, right? So, because the rainy day fund is going to happen. I think Dave Ramsey calls it the emergency fund, right? You have 6 months or 12 months in some cases put up. So where, because I'm going to tell you like this, in 2008, when the market crashed, and now there's self-employed programs, but before then there wasn't, like not a lot. If you had your house almost paid off, you didn't have a job, RJ, as a lender and you're a former underwriter, would you give somebody a refinance cash out if they have a job to verify?
No, sir.
No, you're scared, right? Because we got to verify the ability to repay, right?
Absolutely. We're
now
not
some of that has
money
changed,
out there for
right?
nothing.
Right. Some of that's changed. There's different programs you can do if you're at the right age, reverse mortgage, all that stuff. But if you are in a situation where you've been putting up and saving diligently, right, and you're paying things off, if something happens, it's like going to work with it. If you got money in the bank, reserves, if you don't like the job you're going to, more likely you can look for another job. It's not going to stress you out as much.
Yeah.
Because not saying you trust should be in money, because we're a faith-based podcast here, but
Absolutely.
I'm saying God tells us to be good stewards.
Yes.
And so if you're properly prepared, life will hit you, but you'll be prepared to take life punches.
Absolutely.
That's all we're saying. Life has hit us all. Life has hit you, RJ. It's hit me, and so we try to make adjustments with those things. And but no, we're not telling you to take. I mean, I probably, if I have to guess, maybe 10% of these will get done like this. But if I help one person a month be able to afford their mortgage, more comfortably, right, then I think we've got a product that helps them.
Yeah. So for anybody who's listening right now or later, this is one of the reasons I really enjoy working with Brian. Brian looks for solutions to help you be able to afford not only the house, but what comes with the house, right? And again, when he shared with my wife and me, the one additional payment a year.
That was years ago.
it was, but obviously it stuck, right? And it worked. It worked for us. We are mortgage free. And so
they adopted me.
Yeah, you're gonna be the stepchild though, man. Cameron comes first.
That's right.
No, I love the additional solutions that you provide to your customers. And to me, it shows a great deal about your character, because you're in it for the relationship, not just for the transaction. So I appreciate that.
No, you're the same way, man. We partnered up for a long time. I was sad when you went back to corporate. I'm glad you're back. It's nice to be able to have people on your team that you can trust. And, I say that, that goes without saying, I love you, bro. We're I can't wait to hang with you on Saturday. Seriously.
I'm looking forward to Saturday, man. I got an outfit for you.
Oh, I do too. I got mine. So just so you know, we were supposed to throw a surprise birthday party for my wife. She started 45. We're doing a 70s, 80s party. We're gonna have a good time at the house. But here's the thing. My mother-in-law kind of listened earlier. She was hitting, kind of knowing, but my mother-in-law put the text, the picture and everything on the text. And so Erica's known. So she's been going all out, jumping in. So she's kind of planning her own party. I got some surprises for her still, but I'm like, all right, go have that. I'll be out of town anyway until Friday. So I'm like, all right, all I got to do is cook on Saturday. So we throw some stuff. So we're gonna throw some seafood on the grill. She's got some things. She's cooking, she's doing stuff. So later so
she making some cookies.
Probably, and she's making some of these this yogurt parfait that she makes. It's really good.
Okay.
So she's doing. I mean, she's going all out, which I was going to do anyway. But she's participating, so I just like, all right. I wash my hands. I love her. Let her do her thing. That's what happens when you thank you. Actually, I'm gonna say thank you, mother.
There you go.
Thank you, because it took some weight off me. Although I got to hear it too, though.
Yeah. Hey, don't forget the flowers, man.
Yeah, that goes without saying. She still got, she got a bunch of flowers. She loves carnations, so those are sitting on that table. Those are not going to be out by Saturday, because that's why she like. So what? I got to get another.
Yeah, man. Look, it's birthday time now. Look, that was the other bouquet was for Valentine's Day. Now you got to come with the birthday ones. Have them delivered to the house to her. She'll love it.
Yeah, that wouldn't be a bad idea. So she gonna know because this is being recorded if she watches it that you gave me the idea. But hopefully she don't watch the show. She don't have time. She got 3 kids to take care of, right?
Right. She won't know that you told me to say it. So there you go.
Oh man, hey, look, we got 2 minutes, man. I love it, you guys. Please, thank you, gamer anime. So thank you. I appreciate your nice comments, man. But look, what was I gonna ask you? Oh, I want gamer animates. I wonder if that's one of my kids jumping in.
Hey, it could be.
I think that's Isaiah. So here's the thing. We're gonna take 1 minute because we need to get our sports in.
Yeah.
The Bears bluffing, huh? They bluffing. I don't think they do.
I don't know who's bluffing. I mean, I'm hoping that our politicians don't push too hard and make them go across the border, because the land is cheaper, the tax base is lower over there, and they can go all out in Indiana. It'll be a little more expensive to do those things here in Illinois already. So
they own $300 million worth of land already, though, here.
I know, and they can sell it.
That's true.
They can sell it to a developer.
Have you been to Hammond?
I have.
All right. So no shots at Hammond. I love y'all. No, I leaned over there. But I saw one of the guys, I can't even think of the guy's name. He does Bear podcasts and all that stuff. And he was like, he could smell the factories over there still. I'm like,
that's a possibility. But it's amazing what a beautiful new stadium will do to make it look a lot more wonderful.
Still don't smell unless you knock down on doggone factories, man.
Yeah.
You do what they should do. They should put, remember those Cinnabon? What was it? What was those cookie factories in Chicago? They make the Cinnabon. You just smell the bread. 55th Street, right? Or Garfield.
Garfield.
A couple of those over there.
Yeah, right. Or Jay's potato chips.
Yeah, just put some. That'll make it smell better. There you go. Cook that bread early in the morning and clean it up. No pun intended. For all my Indiana residents, we appreciate y'all. We see more and more people going to Indiana because you can buy a $500,000 house in Indiana. Your tax is going to be like $4 or $5 grand. You come to Illinois, Governor Pritz and all the pundits that be, they're going to charge you about 13, 14 grand and say you're not paying your fair share.
And maybe more depending on where that property is located.
Right, depending on where it's at. Hey, you give you a good deal. So I don't blame them, man. Look.
Yeah. I hope they stay in Illinois. I hope we can make that happen. I would absolutely hate to see our Bears cross the border. I know they've done it in the Jets. They call them the New York Jets, but they're
Giants too.
Yeah. I don't want to see that happen with our Bears. So come on, politicians, Illinois politicians, let's make this happen.
Come on, Bears too, because I think the Bears are playing possum too, man. They on some BS too.
Yeah, they're both playing chicken.
They are. They both playing it. I don't like it. They need to.
I don't like it either. Not one bit.
I like the Arlington Heights. It's actually closer to me to go to Hammond though, just so you know.
Oh, I know.
Yeah, I wouldn't like the traffic. Yeah. Arlington, I don't mind the drive. Arlington, that's over there by the old church, right? So.
Not too far. But it's right off the highway at Euclid. It's right there.
Yeah, by Barrington, right? Not Barrington.
Arlington Heights.
Arlington Heights, but by Schaumburg, not too far from Schaumburg.
Yes. Yep, yeah, just a little north of Schaumburg.
Yeah. So I mean, it's a little bit of a drive, but
Yeah.
That'd be nice tailgating though. That'd be fun too. We got 3-4 years to worry about that. They need to make a decision though.
They do. I want them to lock into Arlington Heights. Just come on, Bears. Come on, politicians. Let's get it done. Just lock it in, get the contract done, and get this thing going. Start the building process.
Are we gonna be season ticket holders? They do it in Arlington?
You know what, man? I'll tell you this. I like where the Bears are heading. And if, I would be a season ticket holder because it would be indoor.
We're making a deal right here, 50-50. Let's go.
Let's do it.
Look, and those tickets, like the Bulls tickets, we're not giving those. You might need to get 4 seats. It's only 8 games.
I know.
Look, it ain't gonna be too many games I want to miss.
Right, absolutely.
Oh man, that's fun. But I appreciate. I can't wait to hang with you, man. I got an early flight tomorrow too, so still cleaning up some stuff. I got to talk to. I had one. Here's a real estate thing. I probably shouldn't say this. I'm gonna have some fun anyway. So no, you know I'm crazy. Look, we have fun. We treat you right. We'll never lie to you. That's our thing, right?
There you go.
Have fun. I'm gonna be good. RJ knows what I'm talking about. I was getting a text from a client about rates. And it was a special program. And I was like, well, you're doing a special program and the rate's not going to be the same as a special program. Like if you're doing something like we were having a little fun with that. But no, look, give us a shot. RJ's willing to help you out on the insurance front. I'll help you out with the lending front. And we're going to get Mo back on the next show. I'm sure he had something come up, man. He's a powerhouse agent. Hopefully we can get him in the next couple of weeks. But yeah.
Absolutely. And hey, at least with either of us, the most important thing is that you get educated in the process. We're going to make sure that you become a better consumer. And when we say a better consumer, we mean better for your household, not for our pockets.
Nope.
So give us a holler, see what we can do for you, see how we can help you.
Yep, I'm going to say that. And I think I'm learning this lesson too. And I'm having a little fun. RJ's 100% right. But I got a saying behind me that says the prayer of Jabez. And it says that Jabez cried out to the Lord that he said, enlarge my territory and bless me indeed. And the Lord answered his prayer. So you have two men or God where two or three are gathered in his name. There he is in the midst. And I'm not manipulating this in any way, but we're asking for your business, right? You have not because you ask not. So we'd like to earn your business. Give us a fair chance to do that.
Yep.
Because you know what? When you go to Walmart, Target, whatever you want to name, Amazon, now that's the big thing, right?
Yep. They're
not trying to help you. You just give them your money. So give us a chance to help you, and not just with these different companies out there. You got people that actually care about you and go do things the right way, and give RJ a fair shot. I mean, I would trust him with my kids. So that's what I would say about that. And yes, and we don't look out what's best for us, right? Yeah, I mean, it's look, we benefit from being able to do the service for you, but this is what we want to make sure that we can talk for you 5 years, 10 years from now. We're still able to do, say hi to you at a Costco, right? You're like, I'm going to kill him, that guy. And that happens a lot. I run into clients all the time at Costco, different, like, hey, the only problem I have, and I'm just going to openly admit it, I'm getting better at remembering names, but I don't forget faces. Yeah. So that throws me off. But no, it's really cool to do that. So I just went over, man. But look, guys, give us a shot. RJ, American Family, rjames1@amfam.com. It's in the comments. And then Team Sewell at guildmortgage.net. That's me. We'll love to help you out. God bless you. Have a great week.
Take care, everybody.